Hey traders, welcome to the Wednesday trading strategy session. Pretty good week so far. Things are really starting to line up for us. Exactly what we've been waiting for all this time, and finally starting to see some dividends on our analysis work. So starting with the pound, as you can see, we've broken lower. In terms of structure, still a little bit fuzzy as to what we're seeing here. Just keep in mind, there's always the possibility that we're going to see this pop higher from here and then fall. That's why we have such a nice wide stop and just allowing things to play out. There's also the possibility that all of this is an A, B, C, D, E, and another pop higher is going to be your E wave of an expanding triangle. And also the possibility that all of that is actually complete already and we are part of that impulse to the downside, probably along the lines of a contracting triangle in this region. So as you can see, it's all looking pretty good for downside. We've had that impulse, we've had our correction, potentially a little bit more correction to come, but the impulse to the downside should be on. Conservatively speaking, where it stands, we have an impulse. If we look at all of this as corrective, we can see this drop to kind of 135 before a turn to the upside, if that is going to be the case. But I'm more inclined to think we're in correction for further downside. We'll just have to take note of what is occurring here as the kind of hours and days roll on. We'll have to manage our trade accordingly. Obviously, this is a lower risk trade, but a nice wide stop. I'm going to give this room to breathe and only have to really look at this down the line in terms of when we see real price action that resembles a turn to the upside. But from what I'm seeing in the other pairs, it looks a lot like our dollar bullish thesis is really starting to play out, and we can start to look at some longer term trades now. As you can see, New Zealand dollar, US dollar just continues to break lower following that news that they're not going to prop up the housing market anymore. They want to reduce that, which means they're going into a more easing cycle more than tightening, and that's why the New Zealand dollar is dropping strongly against the US dollar. US dollar ZAR kind of chopping around. We had our little trade in this region here. We took this little break to the downside. I moved my stop to break even. Sorry, that's the wrong way around. I moved my stop to break even fairly early on, as you guys know, and we moved to break even yesterday. So as you can see, it's really choppy. Happy to have taken break even on that trade. Kind of chopping around. You would have expected further downside by now. So we just have to wait and see how things are developing now. Kind of two theses that I have for the US dollar ZAR. One of them being this corrective structure for continuation to the downside, but also this is the US dollar ZAR turning point in 2011, where when we went back from that ZAR bullishness back to dollar bullishness, and the dollar strength really started to take hold. And this is what the price action looked at the bottom. And as you can see, pretty fairly in tune at the moment with what we're seeing in today's market. So this could very easily kind of bottom out in this region and start to take off and follow our dollar bullish market thesis that we have. So keeping a close eye on this. Nothing really tradable in here at the moment. There's just much better trades on the cards. Very similar to US dollar Swiss. As you can see, we were taking this, you guys know, as what we call a structured day trade. We took this. We never took this trade because we decided to go with the US dollar ZAR itself. But if you had taken this trade, nothing really wrong with it. You had this nice impulse. You had a nice ABC correction. You had that strong impulse to the downside. It got into our minimum zone and then turned to the upside. So another one where you would have just taken break even on the trade and been out happily at break even. No issue there. How this is going to develop over time, we have to wait and see. But I suspect this is all just the start of a much bigger corrective structure, which we can get into a long trade later on down the line. Silver just continues to march down, which is great news for me, given I was a little bit worried about this developing into an ABC. The closer we get to these lows, and once these lows are broken, I'm going to be a very happy man, because I know then that what we looked at here, as I was hoping, was actually just a little bit of a kind of pennant / running triangle type structure, or more than likely that's the case. And we're seeing continuation to the downside. So silver trades running really nicely now, kind of out of the danger zone. Somehow I managed to avoid getting taken out for break even, and we're off to the races, it looks like. So First initial targets are going to be these lows at 22. But like I said, in the longer term macro play, if we're heading towards the dollar bull market, the downside targets of silver are more like $4. So this could be another really, really good trade for us. Platinum's kind of sitting on the sidelines. Platinum was a little bit of a hedge trade to get long if we had the right setup. We haven't had that setup just yet. So still kind of observing it. Perhaps silver still turns. Perhaps silver is an expanding flat rather than the structure I was looking for. Perhaps all of this is an ABC expanding flat and we have some upside, in which case I can look for silver as a long to kind of hedge my bets against my precious metal shorts. Gold, still chopping around sideways, but as long as it's chopping around sideways, I'm happy because that means it's not impulsing to the upside and is more in line chopping for further downside. So like I said, precious metal shorts looking really good as our dollar thesis starts to play out. Euro New Zealand kind of looking really good. 2 trades in at the moment, both in profit, one from these lows in a extended flag play, one from a lower time frame corrective pattern play, both in profit, sitting really nicely, still impulsing to the upside, which is really good to see. And upside target 174. If both of these come off, we have a 5% plus 3.13% upside, which is total 8% upside in one trade, 8-1, with very little risk on the table, only 1% risk on the table at the moment. Really nice. I really like this trade at the moment and hoping to see it continue. Euro pound, frustrating trade. I moved to break even because it was a 1 hour, it was a kind of day trade, shorter time frame structure. I moved to break even fairly early on, and we got taken out for break even, and they just rallied strongly in our favor. Then strongly came back and then rallied again. So really challenging conditions. So I got nothing out of this trade, but if you manage to hold on to it, there's a good chance you're going to get the full 4.5% out of this trade. And I would definitely move to break even now, given the structures that we're seeing. Although you may see another swing down, all of this as an ABC before the next leg higher. So really choppy, really messy, but I guess it was expected if you look at what this A wave looks like. So the choppiness is playing out. I got shaken out. I don't mind being shaken out. I've got some good trades running, like the Euro Yen, which is looking really good as well. As you can see, had to hold on to a little bit of a storm in this section here. Again, managed to avoid break even, only slightly. So I'm getting some vindication from my oil short. And this is kind of playing out in my favor. Still a little bit of downside to come, kind of a third of the way down to our full target. As you can see, potential for 3.4% downside, but it's actually 6.8% because I doubled up on this position. So as you can see, if things start to continue to play out, we're seeing at least a kind of 12% or 8 plus 6, 14% upside on these 2 trades alone. So these euro hedges, if they continue in this manner, are just going to continue to look really, really good for our portfolio or trading portfolio at the moment. I'm currently running 10.1% on all my open trades. So like I said, it's been a really good week. I called for a double-digit week and we've already there on Wednesday morning. So things are looking good. CAD Yen also running really good. A little bit of a storm here. I decided to keep my trade open, keep a nice wide stop, avoided that move, and now continue to the downside. Might move to break even now. It's a little bit of a worry what we're seeing here. A little bit cautious. I'm actually just let this run, considering we have some good profits in some of those other trades. I still like where we're sitting on the higher time frame, still kind of overcooked. As you can see, there's still a decent amount of downside to come from this overcooked parabolic type structure that we have on the 8-hour and daily time frames. So we could get this could see some continuation to the downside, especially when you see Euro Yen dropping, CAD Yen dropping, Swiss Yen dropping strongly, New Zealand dollar yen dropping strongly. So lots of indication that what we're seeing is the start of a really big move, kind of a risk off with these emerging market currencies, not emerging markets, sorry, commodity currencies are really starting to fall, especially as you see oil selling off. So we can continue to look at CAD Yen as a positive trade. And that's why I would rather just keep my stock where it is. It's only 1% risk, so happy to just let it run and see how things develop moving forward. My only concern is Aussie dollar yen. When you look at Aussie yen, we're sitting right in that running flat danger zone. So we'll be keeping a close eye on this, because if this starts to move to the upside, it should be quite a strong move to the upside. So I'll be keeping a close eye on this to get a little bit of a hedge trade long in at some point. Play even maybe an overextended flag play on this could turn out to be really lucrative. So we'll be watching for this to give us that kind of entry moving forward. But when you look at New Zealand dollar yen, we had the same setup, and that just accelerated strongly to the downside and looks more like it was a kind of dystopian kind of rising wedge. I don't want to call it a rising wedge because it's not that, but it looks like it's broken down into being more of a move to the downside. Obviously, we can still look at this as an extended flat. If we look at the numbers, we're sitting right at that 1.618 region. So we could still turn to the upside here as an expanded flat. So again, watching our New Zealand dollar yen, watching the Aussie dollar yen closely, which we may hedge against our CAD yen short and Euro yen short. So we'll get some good hedges in play, especially with the Euro yen running at zero risk at the moment. Sitting at, what are we sitting at now? Probably sitting at good 3-4% profit at the moment. So we'll see how things develop on this Aussie dollar yen chart. It's again going to be some very technical trading, but patience will really pay off here if we can align ourselves with the price action that occurs over the next few hours and the rest of the week. It's cool, guys. Keep it real. As you can see, things are looking really good. So just stay focused, stay patient, keep an eye on the trading group, because we'll be posting our updates there. So far, so good. Double-digit week already. And let's see if we can lock in some of those gains now. Hopefully, we just see continuations to our profit targets. We don't have to worry about making any serious decisions just yet. It's cool, guys. Have a great day, and we will chat again tomorrow.